Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. And we are the short-term traders with the long-term plan. And one of the things that we plan on doing is helping traders across the globe, especially you distraught traders, to help feed your families or at least teach you how to get the analysis right and keep you on the markets. And that's why we work so hard to bring you these videos. With that in mind, on my last video, I had a comment from a gentleman named Tom. Tom, you know who you are? And here's what he said. I gotta say, Oscar, I respect your passion and your willingness to help others. Something I would never do when it comes to trading. I wish you all the best, Tom. Well, Tom, you know, I understand what you mean by that, but that is our plight. It is what we do. We are here to help you traders out there, so come on down and let us help you. Let us help you read these charts better, and let us help you stay in tune with the markets. Traders, we are here. Our site is www.livewithoscar.com, and you can come and join a free membership. It will cost you nothing to come down and see what we're about. Speaking of which, if you enact in a free membership, you can come to our forums. It's a place where people type questions and answers to one another and interact. Those forums, again, are free, and they've been going crazy lately. Thank you, Omniacs. Thank you for using the forums. Now, speaking of the forums, what you get with the forums, every time you leave a post, you get 2 OmniBucks, and when you reach 100 OmniBucks, you can redeem them for free classes at our site. And a class consists of me on camera and microphone, and I put up charts on my desktop, and then I project that desktop out to your computers so you can see the charts live as I move them around and throw indicators over them, and you can hear me and see me as I explain how to use them. Traders, it's the best way I could find to teach you Omniacs, and by the response, it's really helping the Omniacs out there learn how to get the analysis right. So do yourselves a favor and come down, grab a membership, and let us show you what we can do to help you. Okay, traders, we got a video for 4/22/08. That is Tuesday. We got a rate Omni for Tuesday. And as we've been saying, don't fall in love with the upside. And I am not ready to fall in love with the upside yet. We've had a couple of days rally, and that is meaningless as far as I'm concerned unless we get above certain levels, above certain averages, and the markets start all moving in opposite directions of the way they are currently going. And being that that's not the case right now, a Google day that runs the market up is not the makings of a bull market. We got Apple coming out tomorrow. Who knows what those earnings are, but Nokia and other companies' phone sales have been going down. And I would imagine that Apple, who's been relying on their phone for the longest time for good sales, may have the same trouble there. We may see that their results are going to be lower, and if that's the case, that will help to drag us down. Now, traders, we have a great many technical reasons why this market is telling me to tell you not to fall in love with the upside, and I'd like to show you a couple of those reasons now. Technically, I got some charts I'm about to go to. Take a look at these charts and tell me what you think for yourselves. Traders, let's go to the charts. I'll be right back to you. Okay, traders, the first chart I'm going to show you is the June S&P Daily Bar, the SPM8 or ESM8, if you will, for the Emini. This chart's got a lot happening on it, traders, so take a look at it. As we know, we had the Head and Shoulders top, which brought us down to where we are today. That top started back in 2007, the end of 2007, into 2008, which gave us the breakdown. Now we are still way below the 200 bar moving average. That was one of the things that kept this market in check since the breakdown. This chart has a lot to offer. Look at this. It's got 4 tops. 1, 2, 3, 4. 4 tops here. 4 tops, 3 tops. They talk about selling them first and then buying them when it breaks above. 4 tops is a little tricky. There are many reasons why the market is herky-jerky right here and acting tricky for us analysts. And I'll show you a few of them. Right here, you are looking at a couple of instances. You got the 4 tops, and then you have something that could be considered an inverted head and shoulders, while at the same time we have a bear flag, a big one. Here's your flagpole, here's your flag. Inside of that flag, we have another flag right here now. Here's your flagpole, and here's that flag. So you have a flag, you have another flag even larger, so you got a small flag within a big flag. We are still below the 200 bar average, and I think this market may have some weight to it on the downside. I do not think the economy has turned, but we'll see. We'll let the charts do this talking for us, and we will follow whatever they say. If it means getting bullish, well, so be it. We'll become bullish. For now, we are still in the bear camp. Here's one look at why. Again, a large flag, a smaller flag within that flag. Yes, this could be an inverted head and shoulders. It looks like one, but I have said before that inverted head and shoulders do not usually produce a big up move if they're in a bearish market. This is a bearish market, so inverted head and shoulders like you see here many times will not produce the rally that they would if it were in a bullish market. Let's look at another chart now and we'll see what we have. Okay, traders, the second chart I'm going to show you is the S&P cash chart, the SPY daily bar. And I just wanted to show you how Bollinger Bands wrapped around the market, but not the pre-canned parameters for Bollinger Bands. We have different parameters we like to use here at the Emini Trading Academy. One thing I have noticed is this, with the exception of one time since the highs have been put in and we've become bearish, the markets have not violated the upper end of the band. Look here, it pays the utmost respect to the upper end of the band. Again, the utmost respect paid, and all through here, the utmost respect paid to the top of the band. Now we've hit that top of the band and indicators have turned bearish, and if you look right here, the Bollinger is starting to flip towards the downside. Now, if you notice, you violate the downside of the bands quite often in this move, but not really the upsides. So we've touched the upside, and to me that is another indication that it may want to turn and come down and check the bottom end of the Bollinger Bands. So take a look at your Bollinger Bands and see if you see the same thing. Okay, traders, the next chart you are looking at is the S&P weekly bar chart, the SPM8 or ESM8 weekly bar. And this weekly bar has a lot to show you as well here. We started this, now it's a weekly, not a daily. We started this decline with the head and shoulders, just like on the daily, but more condensed because it's a weekly. And then we got below the proprietary moving average we like to use here at the Emini Trading Academy. But look at this. Look when it gets above how much respect it pays to this average all the way through. Well, traders, now we are below it. We're below that average. If you go back further on this chart, you will notice that we stayed below the average here for about 3 straight years. Then got above it and stayed above it for 5 years, and now we are below it again. On top of that, look at the bear flag that's formed here on the weekly. You got a bear flag on the daily, and now a bear flag here on the weekly. Here's the flagpole, and here's the flag. And it looks to me like it wants to at least come test the bottom end of the flag. If it breaks lower than that, then you have a decent projection down here somewhere. So another reason why you cannot fall in love with the upside unless you get above this proprietary average and begin to hold for a few weeks. I do not think the cause to jump into the bull camp is here yet. Take a look at your charts, traders. Tell me if your weekly does not match the homework I'm showing you here on this weekly chart. Okay, traders, you've seen the charts. You see what I'm trying to show you here? Yes, there are some reasons why you might want to be bullish looking at the charts in a very short-term view. You go look at that weekly, and the weekly says, don't buy it. Don't get yourselves long. Wait for this rally to fizzle out and then get short. And it looks to us like for tomorrow, 4/22/08 Tuesday, the rally may be topped off a little bit and you may need some downside action. So let's see what we're going to get. Traders, before I even give you the work, I want to remind you of a couple of things. We are doing the money show at the Mandalay Bay, everybody. Yeah! We got the show going on from May 12th through May 15th. Traders, we want all you Omniacs to come on down to Vegas and meet us. I will do special classes just for you Omniacs We will be at that booth. We have a booth there which we will man every day of the show. And then we can all come back to the Omni Camp if you want, and we can show you what we got going on here. So make sure you come down to the show. Book your tickets. The plane fares are not very expensive. They come in and out of Vegas every 5 minutes. You can't believe how many flights show up here. So no excuses, traders. Book yourselves a flight and come meet us from May 12th to May 15th. I have a speaking arrangement on May 14th, an engagement, I guess you'd call it, right? And they're giving me some extra time so that I can speak for over an hour. So we'll see what we can compact in that hour. So make sure you get your butts on down to Vegas and come join us. Traders, the video archive that we've been working on, the classes that we hold every day, well, that video archive has been released for our premium members, and we're asking them to do beta testing on those videos. You gold members have access to it for now. A couple of videos we'd like you to check out as well. But please check out the archives and let us know if it's working well so that we can actually release it out of beta form, and then you can see those classes that we hold every day in the evenings. If you have a day job and you can't be there live when the class happens, you can review those in the evenings, and that is a great improvement on what we've been doing here, traders. So come on down and check those out for us, please. All right, traders, let me get to the Omni for tomorrow, the Red Omni, baby. Let's see what we get out of this one. I don't have to pick up that old bullhead, do I? Now, we'll leave the bull on the ground for now, but I'll tell you, I think it's an old tired bull already, so let's see what happens. The Emini S&P, the Omni says to sell in the mid to high 1380s, trading 1383 as I speak, mid to high 1380s. The Omni's profit objective on that trade is the mid to low 1360s. I know I got high there. I see you looking at me, Michael. It's actually the mid to low 1360s with some support expected on the way down around the 1373 area. But we'd like to see you sell them in the 80s. Put your stop in. Traders, always place your stops first and always put your stop in. A stop is your best friend. I'll say that again. A stop is your best friend. Anyone trading without stops is cuckoo, in my opinion. Put your stops in and don't be a cuckoo bird, because it could be like a gun to the head one day on a really big move. Fed comes out and does something unexpected and you don't have a stop in, and the tears will start streaming. So we don't want that to happen. So put your stops in. Traders, we're also looking at bonds on the upside tomorrow. If S&P goes down, likelihood is that bonds go up. We have a trade recommendation on our site. So again, come to the site, www.lawofalaska.com, and check out those trade recommendations so they can help you figure out what you think about the markets tomorrow. Now, traders, I don't care who gives you a recommendation. If you haven't done your own homework and you haven't checked your own work and made your own decisions and then used the recommendation as a mere indicator to prove your case, then you're not doing this correctly. Don't take anybody's word for it, not mine, not the guys behind me. Don't take anyone's word for where to trade. Do your own homework and then use my recommendations to help reinforce what you've already thought would happen tomorrow. All right, traders, we got 303 now, right?
Yes.
303 videos on YouTube waiting for you, a lot like this one with more in-depth analysis on many of them. Come to our YouTube spot. It's www.youtube.com/futures analysts. When you get there, please subscribe to those videos so YouTube can shoot you an email the moment you log on to YouTube, and you'll know that we put a video out. We also love the commentary on the videos. You guys keep placing comments. I keep answering them. So put comments on my videos, traders. We interact there, and I will certainly write back to you if you write a comment. Traders, don't trade alone. Never trade alone. Don't trade alone. Not when you got an army of Omniacs to come sit with and huddle with and ask questions and try to get this right. We work as a group in unity to see if we can call these markets correctly every day, and it will surely help you, as opposed to sitting by yourself in your living room or your office and trying to type in your orders and figure out what the news is and not have people around you. You come to our site, we got cameras on and microphones, and it's live all day and night. and we can be there to help you. There's a whole lot of people that are really great at this site that'd be more than willing to help you newcomers out. So come on down to the site and let them help you, let us help you, and further your education at the Emini Trading Academy. All right, guys, anything else I should give?
Yes.
What is it?
One, we have 4 million hits on the website as of today.
We got 4 million hits as of today. Traders, thank you so much for coming to our site. 4 million hits at the Emini Trading Academy. That is a big number, traders. Thank you so much for your patronage. What else did you have? That was number 1.
We have 2 videos we're going to debut for the Stop Surrend Emotions Are Out videos.
Traders, stops are in, emotions are out videos that we've been asking you to send in. Well, we've got some sent in, and we're going to put a couple of them at the end of this video. So stay tuned and watch. These videos are our Omniacs who are part of the site. They're putting together videos of themselves or a duck or a friend or an elephant or whatever you can come up with. Something that you can film saying stops are in, emotions are out. And as you send them to us, we will start putting them at the ends of these videos. So come on, Omniacs, shoot us your videos. You can simply just take a cell phone and take your own picture, have someone else do it for you, but do a little video clip and send it in, and we'll put them at the ends of our videos each evening. Traders, please send us your emails to oscar@futuresanalysts.com. And as always, give us a call anytime, day or night, 702-629-4755. Okay, traders, that's about it for this video. I want to go out there and trade. The bonds are getting into our buy zone right now. So take a look at the site. Make sure your orders are in. And don't forget to say this to yourselves every day, every morning, every afternoon, every evening. Say it constantly because it'll help you with the mentality behind trading. And you know what that is? Stops are in. Emotions are out.
Stops are in. Emotions are out.
Don't let this market destroy you. Stops are in, emotions are out. Don't fall in love with the upside.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.